Hey, it's Wednesday, the 18th of January. Thanks for joining me. Right, we're going to have a look at we're going to have a look at gold. We're going to have a look at dollar pairs. We're going to have a look at yen pairs. Try and watch it through to the end because honestly, you're going to find this useful. It's not unusual for markets to be indecisive at the beginning of the year. Through December, markets wind down. Big traders, funds, banks, they're winding out of their positions for the long holiday period, and they don't jump in the first week of January into their positions. So it's not surprising that the markets take a little bit of time to warm up at the beginning of the year. But this year, the first couple of weeks, we haven't done much. We're not seeing much direction. Unfortunately, we're seeing mostly sideways trending markets. And I had thought that we had a bit of a trend going at the end of December with the dollar moving to the downside, with the Federal Reserve chair talking about interest rate cuts this year. It seemed like we actually had some direction for the dollar. It seemed like the dollar was starting to weaken. We even had sort of fundamentals backing that up. But the market has now decided that we will not be seeing aggressive rate cuts. They're dialing back on that. And also some Fed members are suggesting that we're going to have higher rates for longer, which has been a message for the last couple of years from the Federal Reserve. But the financial markets haven't really believed it. Now that we do actually look like we've got a peak in interest rates, the markets are suddenly deciding that they do believe the Federal Reserve. This is just the bizarre nature of financial markets. Okay, the chart I'm showing you at the moment is the hourly chart for gold. Now, this goes back a year, but it is an hourly chart. So I wanted to show you this on the hourly chart because it just shows you how we really don't have much of a trend for gold at all. We're now trading around where we were in April, May of last year. I mean, we have been for the last 2 or 3 months anyway. We're just in this sort of random, erratic, sideways movement. Fortunately, we have had some good trades in gold. I did decide to sell gold up around here, even though we were in a bull trend, and it goes against what I believe. In a bull trend, I will be looking to buy. But anyway, fortunately, it did work. For some reason, I just felt that we should be getting short. However, now last week we were getting long down here. That worked really well. This week, I did suggest a long down here as well. I had to. We're in a bull trend. We're testing a support level. The support level held last time. I had to suggest the long, but we have broken down now. So what does that mean for gold now? Well, looking at the 4-hour chart, I've just switched over there. You can see the trend lines that I've got on the chart. You can see the fib levels. It looks like we've broken down. I have to go with the bears now. I think I have to switch to a short strategy just in the very short term. I don't like being a contrarian. I don't like trading against the trend. But for now, because we've broken these trend lines, I think that in the short term, the trend is to the downside. So I'm going to go against the longer term trend. Lastly, on gold, I know it's a very popular market, so I'm going to just say one more thing. Look, this is the daily chart. You can see there is no clear pattern. There is no clear trend for me to base my trades on. We've broken below the 2012 fib level. That's the 23.6% fib taken from November 22. So that is a very, very long-term fib level. It held last time. We've broken down. But even the moving averages on the daily chart for gold now are starting to flatline. And when that happens, it really does tell you that we're in such a longer-term sideways trend. And actually, let me show you my trade sheet for today. There you go. Look, short-term trend. Everything is in a sideways trend. It's a real struggle just to find a trend that I can jump on, buy a support level in a bull trend, sell at a resistance in a bear trend. It really is a struggle at the moment. And yesterday we did get stopped out on quite a few trades. Yesterday was maybe the worst day I've had so far this year, and it's not been an easy year. We have had some good winners, obviously. Someone's asked me to talk you through how the trade sheet works. Okay, so I've divided up the buys and the sells now to make it easier to read. Let's take this one, Japanese yen, US dollar yen, that's obvious. So all the markets are listed there. There's the price. Now I put a range in. Why do I put a range in? Because recently, why do I put a range in? Well, traders tend to get FOMO. As the market moves towards their entry point, they tend to get FOMO. So they might have a specific price that they think that they should enter at. And my ranges tended to be smaller. I've widened them out now as far as 20 pips. And I suggest putting 2, 3, maybe even 4 orders within that range so that if the market doesn't go to the exact price, you still have an opportunity to enter maybe 1 or 2 trades, and it stops that FOMO thing. Because when you miss 2 or 3 trades by a small margin, then you start jumping in too early. So by having a wider range, I'm trying to stop you getting the FOMO, which stops you jumping in too early on future trades. And then you enter in across a range. And when you enter into 2 or 3 trades across a range, it also gives you the opportunity to scale out. So you might hit target 1, and you might think, well, I'm going to exit one of those orders, just take a little bit of profit. I've still got 1 or 2 other orders running, so I can still feel comfortable that I'm in a position, but I just want to take a little bit of profit because I'm getting a little bit of anxiety now because I've made a good profit and I don't want to see that profit evaporate. And if I just take a partial profit, I can relax and let the other positions run. So that's my theory. And then I have my stop level and I have my targets. I often have 3 targets. I'm cutting that down to 2 targets right now because we're in these sideways markets and we're just not getting big moves. I think 3 targets is too optimistic. So there you go. And I do put the sideways. I do put the short-term trend in there as well, and which, as you can see, is mostly sideways. I don't like to see that. I'd like to see a lot more bull trend and bear trend, which would make my job easier. Now, if you thought the gold chart was a sideways mess, look at silver. I mean, this is even worse. We're just trading right in the middle of a range going back well over a year. So as you can see, there is some support down here, and we did buy at this support level last week, and it did work pretty well. We got a good bounce. I've got a trend line to rely on. I've got the 500-day moving average to rely on, and I've got 2 more swing lows here to rely on for this level. So yeah, why not? Let's try along here in silver. Well, you can see it on my, whoops, not that one. You can see it on my, here we go, on my trade ideas sheet. There we go. I've got it on there. 2265, 2255. That's the entry range. Stop below 2230. Now, if we do break below 2230, it would indicate that silver's got some more room to the downside. So if you can jump into a short on a break below the support level, we could be looking at 2180, 2170 as the downside target if you are a nimble enough trader to do that. Crude oil, let's do some trend spotting. What do you think? It's obvious that crude oil has just gone sideways since August 2022. Really no longer term trend for me to follow. In the short term, okay, we do have a bit of a bear trend. We have been going down since October, but look, this is literally up one day, down the next. I mean, it's so difficult to trade. I'm not even going to, I'm not going to go further with that one. I guess I could say that we have a pattern in oil in the very short term when you look at the 4-hour chart and you can see my trend lines there. But the trend lines are really only, we're in a bear trend with maybe a sideways consolidation. That's how I could describe it. You can see the more horizontal lines here showing the sideways trend, and then we've got more downward sloping trend lines here showing that in the over the last few months we are at least in a bear trend. But it's a real struggle in this to find low risk trade opportunities where I can risk 50 pips in oil to try and make 100 pips. Those trades are just not there right now. Okay, let's work through the trade sheet and have a look at why I've chosen some of the levels today. Euro US dollar, I've got a long down at 108.85, 108.65. So within that 20 pip range, I'm suggesting buying into a long position with a stop below 108.45. It's a pretty tight stop, 30 pips, not a huge amount of risk. Why have I chosen that level? Well, again, look, this is the euro versus the US dollar, the biggest currency pair, and it's just gone sideways for over a year. This is January last year, and we're trading exactly where we were there. We've gone up a bit, we've gone down a bit, we've gone up a bit, we've gone down a bit. We're exactly where we were a year ago. So we've had no direction whatsoever for over 12 months. And look, the moving averages started flattening out 6 months ago, telling us that we were in a sideways trend. Sometimes when you get the moving averages flattening out like that and tightening up, you start getting ready for a move. You think we've been going sideways for so long, the 100, the 200, the 500-day moving averages are flatlining. Surely that must mean that we've got a move coming, but we simply haven't. In that last 6 months, we've only volatility has actually decreased. That we had a lower peak than previously. So it really is a struggle for me to find low risk trading opportunities. But I've gone with the confluence of fib levels and the 200-day moving average, hoping that will be a support level. And because we are in a sideways trend, then when we've dipped a little bit, it probably is worth trying to buy into a long position. So that's the theory. That's what I've done. If you can look at the daily chart, we have a minor, very, very minor bullish candle. We've dipped, made a new low for this move, and we've bounced off the 200-day moving average. We've got a small green body at the upper end of the long lower wick. So that's a sort of a bullish hammer candle, if you like. So I feel a little bit more, I feel confident that this long position, could do all right. Where are we now? 108.85, 108.65. We're actually at the buy area now. So if you're watching the video, you have a chance to get in right now. And then unfortunately, most of the Forex pairs that I'm looking at are this kind of mess. Again, that is a very, very gentle upward sloping bull trend for the New Zealand dollar versus the Japanese yen. But really, what can you do here? I simply can't find a trade opportunity. I would need to see the New Zealand dollar, Japanese yen dip to around sort of 89.00, 88.80 for me to have a trade opportunity. I'd happily buy down here, but we're just not going anywhere. As you can see, look at the last few days. What's this? 1, 2, 3, 4, 5, 6, 7, 8, 9. Call it 10 days. We've gone absolutely nowhere. So this is just typical of the beginning of the year. As I said earlier, in January, we're waiting for the markets to warm up properly and maybe get the bigger funds and banks here interested in the market to actually start moving them around again. Euro versus the yen on the daily chart, I wonder if we will build a head and shoulders pattern here. If we do build one, it's going to be weeks away, but I thought I would draw your attention to that. When we look at the shorter term chart, the hourly chart, this is the only place where I can actually find a trade opportunity. It's the hourly chart because we're in such longer term sideways trends. Put my Fibonacci levels on there, and it does give me, this is the only way I can find a trade on the hourly chart here we go. Let me put my trend line on there like that. There you go. So look, we would have to have a dip down to around, I think I've got this on my trade sheet actually. Have I got it? Euro, US dollar, Euro. Yeah, no, I haven't. I haven't got the Euro yen on there. But if we do turn around and slide to sort of around the 160, 159.80 area, that would look like a buying opportunity. But of course, we're going to have to drop over 100 pips for that to happen. But right now, I wouldn't be jumping into a long position. We are obviously in a very short-term bull trend. This is only going back to the 2nd of January, so it's literally only 2 weeks. But that's the only trend that I've got on this currency pair, and I would buy into a support level. I'm normally in a bull trend, I would be happy to buy on a break above the previous high. But because we're in a longer-term sideways trend, I don't feel confident doing that. So with this, I would wait until the pair pulls back to a good support level rather than just buying on a break above previous high. I think that's too aggressive for this kind of trend. Same kind of thing for dollar yen, very much in a longer term sideways trend. I'm not going to bother to show you that on the daily chart. On the hourly chart, okay, yeah, we have a short-term bull trend. It's a 2-week bull trend. That's all I've got to go on. I'll stick with it. I mean, I'm not going to lie. I've been suggesting selling the dollar yen on the way up. Why? Because we had established something of a bear trend at the end of last year. This, I thought, okay, we finally got a trend going, but it was only a correction in a bull trend, even though we were talking about the Bank of Japan having a firmer interest rate policy, but that wasn't to be the case. Now, look, we did buy it down here. This was a beauty. This was just buying at a confluence of Fibonacci levels. But I thought from there we would get a bounce maybe as far as 146, a 146.30, and this would be a short position. Now, we did sell, but there wasn't much of a profit in it. And we were surprisingly broken up. I didn't expect this at all. So again, we could have a head and shoulders pattern here. This could be a neckline to a head and shoulders pattern right here. Okay, there would be a left shoulder, massive head. Then we could have another small right shoulder, break below 141.00, and that would be a sell signal. But we're away off that. That's something I'm going to have to watch in the weeks ahead. For now, I'm going to stick with the short-term bull trend because we've gone further than I expected. So I would be looking at buying into along around the 147.30 area, maybe the 146.50 area. We start breaking below the 100-hour moving average, then I would have to switch back again into a short position. Does that make sense to you? And I do have a buy level for the dollar yen on my sheet today. Cable, this was frustrating. I was a buyer of cable yesterday down at 126.60, 126.40, stopped below 126.10. Now we dipped just before the inflation number came out. Actually, I think it was on the inflation number, was it? We dipped as low as the 125.93. So we just blipped a little bit below my stop level. Now, if you had a wider stop level, you'd have done all right, of course. We got quite a bullish candle again on the hourly chart, the long lower wick, the small upper body at the top of the wick, the hammer candle, and then we took off. So the trade did actually work. We even hit my first target, or got very close to my first target of 127.00. I think, where did we get to? 126.90, 126.96. Now, again, I think I'm talking about a head and shoulders pattern here. Let me just have a look. Yeah, again, we could. No, actually, no, we couldn't. That is way too big to be a head and shoulders pattern relative to the upward move. So let's forget about that. Again, here, I just don't know what to make of the trend. If I do that, you can see that we're really only in a sideways trend. I can't call that a bull trend. And that's going back to November 22. That's over a year long. So if I was to trade this, I have to isolate the bull trend going back from October 2023. But I just don't feel particularly confident. Well, there is no pattern for me to trade on this. Oh yeah, there is a short-term head and shoulders pattern potentially on this here, just on formed over the last month. That would be relevant if we break below 120. That's why I had my stop below 126.10, because I thought if we break below this neckline, we could have formed a head and shoulders pattern, and this would be a sell signal. So that was a little blip below the neckline. I'll be watching this to see if we have a more decisive break below that neckline for the sell signal. And for right now, I can't do anything with this. This is just a choppy, horrible sideways mess. I mean, I did have the right idea buying down here, which is frustrating. If you did manage to hold on to the long position, well done. Take the profit, get out, because I just don't know what's going to happen next now. And the only thing I can do is wait and see if we break below the neckline for a sell signal, and I'll have us jumping into a short position. Aussie dollar yesterday, I talked about us breaking below this area here, and I did suggest that we should be getting into a short position. I just didn't know how to tackle it, and I regret that, because obviously we did tumble, but I'm happy to wait now, because I think we could get a bit of a retracement. We are getting a bit overbought on the hourly chart, but if I look at the 4-hour chart, we're actually very, very oversold. So we could get something of a bounce, and this could even be a small double bottom. Look, the market already today on the hourly chart, we've retested yesterday's low, and we're bouncing already. So we could get to around the 66.00 area, and I think that would be a good sell area. I think I've got that on today's sheet. Yeah, 65.95, 66.15, stop above 66.25. That's my reasoning. We have a bear trend. The dollar seems to be strengthening, but we could get a bit of a correction in the dollar. In other words, the dollar could weaken, so the Aussie could push up against the US dollar, and then I'm going to wait for the sell opportunity. How's this for a sideways trend? A US dollar versus a Canadian dollar. Looked like we were getting some momentum to the downside, and we've literally, this is what's been going on. The dollar has reversed, and it's winning back all the losses that it had in December. So it looked like we had a decisive bear trend for the dollar in December, and now in January we're just reversing and taking back all of those losses in a V-shaped recovery. It's not what I expected at the beginning of the year. I will admit to that. So now I have to react to it. So the only thing I can do is go to the short-term chart and say, okay, we're in a short-term bull trend for the last 2 weeks, and we've got a good support level around 134.55. We will have the 100-hour moving average. I like to base my trades off of my 4-hour chart, but I can't even do that now because we don't have a decent enough trend on the 4-hour chart for me to go with it. So I have to go to the 1-hour chart. 134.55, fib level, 100-hour moving average, swing high just below there, swing low just below there. So it would be a reasonable enough entry, not the best one, but what can you do in a market like this? So I've got 134.60.50, stop below 134.30. I've got 134.10 below as well. And again, that's just a fib level, some price action, and a 200-hour moving average. Do I have a trend line there? Yeah, and I've got a trend line there as well. Again, not a longer term trend line, it's a 2-week trend line, but that's all I've got to go on. So that 134.00 area as well should be a good support level if we hit it. I'm going to have to take note that the market's remaining sideways trends. And so if we dip a bit, I'll buy it. If we go up a bit, I'll sell it. That's all I can do. Try and find a range to trade. I talked about selling gold on a bounce, and there's my sell level 2021, 2023, if we get there. Right. I hope that's useful. If it is, please let me know in the comments box. Please give me your thoughts on the markets, especially if you disagree with what I have to say. I'd like to hear your views too. And I hope that's been helpful.